Well, Power Grid has actually come out with a very strong, steady set of results as far as Q3 is concerned. Most of the key operational metrics, operational performance has been quite steady and quite strong. As per CLSA, the backlog growth of 15% sequentially has been led by large new asset wins of close to 7,000 crore rupees. There has been a capitalization growth of close to 17% on a year-to-date basis, and there has been strong double-digit PAT growth of 25% year-on-year. And these were the key highlights as far as Power Grid's third quarter results were concerned. When you're talking about the results, revenues have come in quite strong, close to the 9,700 crore mark. EBITDA has come in close to the 8,470 crore mark. Margins have come in too quite steady on a year-on-year basis at the 87% mark. When you're talking about the profitability has come in higher at the 3,300 crore mark. Now remember, one of the key triggers as far as Power Grid is concerned is the fact that the company has filed a prospectus for the proposed infrastructure trust with 5 of its assets worth almost 7,200 crore rupees. Now these lines account for almost 44% of its competitively bid equity, and management hopes to list this particular InVIT by March 2021. Now remember, Power Grid, as far as CLSA is concerned, they believe that the pipeline of projects to be built has been decreasing steadily with the peak of India's power capex and completion of the national grid. However, what they're saying is that the channel checks that CLSA is doing suggest that the Rajasthan project wins, costing close to 2,500 to 2,800 crore, could add almost 23% to the company's CP backlog, and this is something that they believe is quite positive. Also, what they're saying is that the launch of the 30 gigawatt ultra mega renewable energy park, costing almost $20 billion, 15% of the national infrastructure pipelines RE capex, as starting the power capex cycle in 2023. So CLSA believes that in FY23 India's new power capex will begin, and they believe that this would present an opportunity for Power Grid, as they not only involve interstate lines but are also located in most of the sensitive regions. They expect Power Grid's backlog to start growing from FY23 to FY24, and also what CLSA believes is that the company can take on additional capex as leverage is quite comfortable at this point of time. They also see that and they forecast Power Grid's EPS to see a 12% CAGR growth over FY21 to FY23, led by the order backlog. They believe, however, visibility beyond FY23 at this point of time is hazy. They believe the attractiveness of Power Grid to ESG investors, inexpensive valuation, very strong and visible dividend yield, which is above the 10-year bond yield, is something that they believe is actually helping them maintain their buy rating.